Greetings and welcome, this is KYC News for you. Today we will see how the crypto market is holding up. Stay tuned and get entertained. Crypto crash explained. Why cryptocurrency went from being the next big thing to having a complete crash. The world of cryptocurrencies is in disorder. After virtual currencies saw an exhilarating surge in 2021, only a few months ago, crypto businesses were extensively promoting during the Super Bowl. Currently, the value of Bitcoin and other cryptocurrencies is plummeting, and businesses like Coinbase, which operates the biggest cryptocurrency exchange in the US, are announcing layoffs. According to Ed Moya, a senior market strategist at the financial company Oanda, the crypto house is on fire, and everyone is simply racing to the exits because there is a complete loss of faith in the area. Here is what is happening. Why are crypto prices dropping so quickly? Because the same things that affect stocks and other assets are also having an influence on them. The Federal Reserve is quickly raising interest rates to combat inflation as consumer prices are rising at their highest annual rate in more than 40 years. The Federal Reserve increased interest rates by 0.75 of a percentage point on Thursday and said it would do so again at its next meeting in July if necessary to lower prices. Concerns about an economic recession are growing as a result of higher interest rates making borrowing more expensive for both individuals and businesses. The broad S&P 500 index entered a bear market this week as stocks have plunged precipitously from milestones established in January, when an index falls 20% or more from its recent high. The same cannot be said for cryptocurrencies. The value of Bitcoin, the most widely used digital currency in the world, has decreased by around 70% since it reached an all-time high in November, and its competitors are also struggling. Both Ether and Dogecoin have experienced a year-over-year decline of almost 70%. Supporters of Bitcoin have often asserted that the virtual currency will operate as an inflation hedge, but this hasn't been the case. Bitcoin's value has fallen along with the value of tech company shares. According to Ishwar Prasad, an economist at Cornell University, what this drop in crypto values, reveals is that cryptocurrencies are primarily speculative financial assets that are sensitive to macroeconomic variables, like as changes in interest rates. What does this entail for Bitcoin businesses, then? Some businesses are having issues as a result of the sudden drops in cryptocurrency prices. Due to financial difficulties, Celsius, which accepts Bitcoin deposits from users and loans them out, has ceased processing withdrawals. On Monday, the cryptocurrency exchange Binance temporarily stopped allowing users to withdraw Bitcoin. Just weeks after the failure of a stablecoin named Terra USD, the issues at Celsius are eroding trust in the larger cryptocurrency sector. In response, cryptocurrency businesses are rethinking their future plans. The personnel of Bitcoin trading company Coinbase was cut by nearly a fifth. The CEO of the business said that Coinbase expanded too rapidly in a message to employees. According to Brian Armstrong, a recession appears to be starting. Cryptocurrency supporters still hold the view that a crypto winter might result in a crypto spring. In the past, severe declines have been followed by powerful comeback. However, the economic environment and the prognosis for cryptocurrencies have changed, according to Moya, an analyst at Oanda. In reality, more pain is likely to be ahead for all markets, including cryptocurrencies, as long as the Fed keeps raising interest rates rapidly and inflation remains high. What does this signify for those who are crypto enthusiasts? For the millions of consumers who purchased cryptocurrencies, especially those who joined the mania last year, it has been an unpleasant awakening. According to Prasad, 2021 was the peak of the crypto craze. Globally, the value of all digital currencies increased to $3 trillion. Coinbase, Crypto.com, eToro, and FTX spent millions of dollars to purchase advertisements during the Super Bowl. Crypto firms also signed sponsorship agreements with professional sports teams. Actor Matt Damon served as the spokesperson for Crypto.com, and Larry David, a cynical comedian, appeared in an FTX advertisement. These businesses' pitch was that cryptocurrency represented the financial industry of the future, and it was better to avoid missing out. Many retail investors were drawn in by the technological allure of cryptocurrencies but were unaware of the dangers they were facing, according to Prasad. The market for cryptocurrencies is now only worth roughly $1 trillion overall. Additionally, if you purchased Bitcoin on February 14th, the day following its Super Bowl marketing feast, it is currently only worth around 50% of what you spent. What will this entail for industry regulations? Regulators are concerned about the rise in amateur investors and the sophistication of some Bitcoin products. Even the most fundamental details, like who is in charge of regulating the area, are not entirely clear because cryptocurrency marketplaces are still relatively young. The Securities and Exchange Commission (SEC) and the Commodity Futures Trading Commission (CFTC) both assert control over specific areas of the cryptocurrency industry at the moment. According to Cam Harvey, a finance professor at Duke University, if there is absolutely no advice, individuals will be taken advantage of, and we want to avoid that. Right now, we really don't have anything. The SEC is mulling new regulations while ratcheting up its enforcement operations against cryptocurrency businesses. President Biden, meantime, urged federal organizations to recommend policies in an executive order. Additionally, the first comprehensive crypto legislation is being worked on in Congress by Senators Cynthia Lummis, Republican Wyoming, and Kirsten Gillibrand, Democrat New York. The Commodity Futures Trading Commission would be granted increased regulatory power under the proposed legislation. However, many analysts do not now believe that the whole financial system is in danger. The overall market value of a significant corporation like Apple is still more than the total market value of cryptocurrencies. However, the recent decline has given rise to some very real worries. Cryptocurrencies collapse under a perfect storm of panic and fear. This week's sharp sell-off, which gained pace, eloquently demonstrated the dangers of the untested and uncontrolled digital currencies. The San Francisco Bitcoin's price fell to its lowest level since 2020. The value of Coinbase, a significant Bitcoin exchange, crashed. The value of a cryptocurrency that marketed itself as a reliable medium of trade fell. And since Monday, the price of cryptocurrencies has fallen by more than $300 billion. This week, the cryptocurrency market completely collapsed in a sell-off that vividly demonstrated the dangers of the untested and uncontrolled digital currencies. The increasing falls of digital currencies like Bitcoin and Ether indicate that, in certain circumstances, 2 years' worth of financial gains may vanish overnight, despite the promotion of crypto by celebrities like Kim Kardashian and tech billionaires like Elon Musk. The panicky period amounts to the biggest cryptocurrency reset since Bitcoin fell by 80% in 2018. However, because more people and institutions now own the currencies, the impact of the declining values is greater this time. While some traders equated the anxiety and dread to the beginning of the financial crisis in 2008, critics claimed that the crash was long overdue. Dan Dolev, an analyst at the Mizuho Group who focuses on cryptocurrency firms and financial technology, said, "This is like the perfect storm." According to a Pew Research Center poll, the number of Americans who possess virtual currencies has increased from 1% in 2015 to 16% as a result of the coronavirus outbreak. Along with hedge funds, major financial institutions like Northern Trust and Bank of America poured in, some of which used loans to boost their cryptocurrency bets. Early investors are presumably still in a good place. However, investors who purchased cryptocurrencies during the price boom of last year have been particularly hard hit by this week's sharp falls. The decline in cryptocurrencies is a part of a larger move away from riskier assets, which has been sparked by increasing interest rates, inflation, and the uncertainty that the Russian invasion of Ukraine has brought for the economy. The stock values of businesses like Zoom and Netflix, which prospered during lockdowns, have suffered as a result of the so-called pandemic hangover, which occurred when life in the United States began to return to normal. However, the decrease in cryptocurrencies is worse than the general stock market decline. Bitcoin's price has decreased by 40% in the same time period, compared to the S&P 500's 18% decline thus far this year. Bitcoin has lost 20% of its value in the past 5 days alone, whereas the S&P 500 has only lost 5% of its value. It's unknown how long crypto's slump will persist. Although it often takes several years, cryptocurrency values have historically recovered after significant losses. Charles Cascarilla, a founder of the blockchain business Paxos, said of the financial services company that failed at the outset of the 2008 financial crisis, "Is this Lehman Brothers? It's impossible to say. We'll need extra time to solve the problem. At this rate of response, you cannot." The first cryptocurrency, Bitcoin, was developed in 2008 by an anonymous creator going by the name Satoshi Nakamoto. The digital money was promoted as a decentralized replacement for the established financial system. Bitcoin supporters wanted to carry out transactions among themselves, documenting each one on a shared ledger known as a blockchain, rather than depending on gatekeepers like banks to enable business. Leading figures in the IT industry, including as Mr. Musk, Twitter co-founder Jack Dorsey, and investor Mark Andreessen, welcomed the technology as it developed into a cult-like movement. A new class of cryptocurrency millionaires emerged as the value of cryptocurrencies skyrocketed. Other cryptocurrencies, such as Ether and Dogecoin, caught people's interest, especially during the epidemic when too much money in the economy encouraged day trading for amusement. As concerns about the economy mounted, cryptocurrency values fell after reaching a peak in late 2017. However, this week's collapse of the stablecoin Terra USD gave the breakdown more impetus. The value of stablecoins, which aim to be a more dependable medium of exchange, is often fixed to a stable asset like the US dollar and is not expected to alter over time. They are frequently used as a means of exchange. Credible venture capital firms, such as Arrington Capital and Lightspeed Venture Partners, supported Terra USD and contributed tens of millions of dollars to the funding of cryptocurrency ventures based on the currency. According to Kathleen Brightman, one of the creators of the cryptocurrency platform Tezos, this created a false sense of security to folks who may not otherwise know about these problems. However, Terra USD was not backed by money, government bonds, or other conventional assets. Instead, it gained its alleged stability from formulas that connected the value of its coin to that of a sister currency named Luna. Luna has nearly lost all of its value this week. Terra USD saw a direct knock-on impact from that and dropped to a low of 23 cents on Wednesday. Tether, the most well-known stablecoin and a cornerstone of cryptocurrency trade, vacillated from its own $1 peg as investors worried. Before rebounding, Tether dropped as low as 95 cents. Cash and other conventional assets serve as Tether's backing. Stablecoins have been on regulators' radar in Washington for some time, but the volatility rapidly caught their attention. Congress was urged to create regulations for the stablecoin ecosystem in a study released by the Treasury Department last October. At a Thursday congressional hearing, Treasury Secretary Janet Yellen stated, "We truly need a regulatory structure. We've seen a real-life representation of the hazards over the past few days. The hazards associated with stablecoins are similar to those associated with bank runs," she continued. At the same time, other elements of the crypto ecosystem turned bad. One of the biggest cryptocurrency exchanges, Coinbase, revealed a $430 million quarterly loss on Tuesday and claimed to have lost over 2 million active customers. Since its triumphal market debut in April 2021, the company's stock price has fallen 82%. The cost of cryptocurrencies also fell sharply. Before somewhat increasing, the price of Bitcoin dropped to a low of $26,000 on Thursday, a 60% decline from its high in November. Since the beginning of the year, the Nasdaq, a benchmark largely skewed toward technology companies, has closely matched the price movement of Bitcoin, indicating that investors are treating it like any other risk asset. Ether's price fell as well, dropping more than 30% of its worth in the previous week. Solana and Cardano, two more cryptocurrencies, are also down. Some analysts suggested that any fear may be exaggerated. According to a Mizuho analysis, the typical Coinbase Bitcoin owner wouldn't start losing money until the value of the digital currency fell below $21,000. That is where a genuine death spiral may start, according to Mr. Dolev. As long as no one lost money, he claimed, Bitcoin was operating. That's sort of the oh, my God moment when it returns to those levels. They believe that there is nowhere to hide, despite the fact that it is unpleasant, he stated. However, the sharp decline in price has alarmed cryptocurrency traders. A few months ago, supporters of the blockchain predicted that Bitcoin's price may go to $100,000 this year. Ed Moya, a cryptocurrency analyst at the trading firm OANDA, remarked, "I never expected things would become ugly this soon." We really hope that you learned the most from this video. If so, please like it and remember to subscribe to this channel for more. Enjoy your time.